Welcome everybody to the Naked Forex webinar. My name is Walter Peters, and I know many of you from FX Street. If there's anything that's confusing here during the webinar, just let me know. Here's my email address, and I'm happy to help you out. The reason why I like doing these for FX Street is because FX Street was one of the first places on the internet I found anything about Forex trading when I first started doing it in 2000. So that's 13 years ago now. Well, not quite 13 years ago. It will be 13 years in June, I believe. So there were very few books about Forex trading, and there were very few websites back in 2000. And there were only a few brokers as well, actually. FXCM and Saxo Bank were two of the ones that just started back then, started getting out there. So I wrote a book about trading without indicators. It's called Naked Forex. I know many of you have it. Though some of the things that we talk about in here seem a little bit funny, it's because they're probably in that book, or they're in an ebook that you can get from me if you email me at walter@fxjake. And those are all free for everyone here at FX Street. So let's today talk about our zones. So as you know, I'm a naked trader. Now, does that mean that I don't use indicators? Well, yeah, most of the time I don't. I prefer to use trading systems that are simple, that use just price action patterns. But there's two aspects to that. One is that I look for trades when the market reaches a spot on the chart where historically it's reversed in the past. So what I'm basically saying that since the market reversed over here, this is just the Euro daily chart as an example. Since the market reversed right here, it came up, it hit it, and it fell, the next time it comes up here, it's likely to do the same thing. And it did, of course. Same thing works up here. The market came up here, printed what we call a kangaroo tail right here, and it fell, and then it came back up and printed what we call right here a belt, and it also fell. So these are two patterns that I use. They're both in the book, and we'll talk about these if you come back to these webinars. But the kangaroo tail here and the belt here, those are pretty reliable patterns. Last time we met, in the last webinar, we talked about the bend trade. And you'll notice that we actually have the beginnings of what could be a bend trade right here on our Euro daily chart. Notice how the market's falling. It's come back up to touch a level, and then it's probably going to fall lower. If the market trades lower than 30.55, so let's say the market goes down at 1.3050, that would be a valid bend trade to me, and I would be looking for it to fall all the way down here to 29.25. So that's a valid bend trade to me. Now, let's talk about these lines on my chart. That's really what this webinar is going to be all about today. So if you're wondering why does he have these lines on the chart, where do they come from, and why are they there? That's really what this webinar is going to be all about. Now, I don't really want to talk about trend lines. Trend lines are like sports teams. Everybody has their favorite sports team and why it's the best team ever. And in the same way, everybody has trend lines and why, I've posted a lot of videos on YouTube, my channel on YouTube, and if you look up my name, Walter Peters, on YouTube, you'll find them. And there's I think there's several dozen now. I think there's like almost 100 videos on there. But basically, somebody posted on YouTube the other day, will you please stop drawing your trend lines like this? It's showing, you're doing it the wrong way or whatever. And I had to chuckle because that's really why I like horizontal support and resistance levels, which is, again, what we're going to be talking about today. I like them so well because everybody can agree that the market is going to probably have some issues when it gets in this area here, in this shaded area here. Now, some people might have the horizontal line drawn here, at the close, at 81.52. Some people might have it at the high up here, at 81.64. Some people might have it at the high of this red candle for some reason, at 81.59. I don't know. But the basic idea is that somewhere in this range of about 60 or about 10 to 15 pips, people are going to be looking for the market to reverse. Now, obviously, it did. When you come back here, you see that the market did, in fact, hit it and fall. It came up here, it hit the level, and it fell. Now, it didn't go far, and it took 5 days for it to finally break through. But that's the kind of thing that I'm looking for when I'm looking at my charts, and that's why the fellow on the person on YouTube said, you're drawing your trend lines the wrong way. Well, everybody draws a trend line a different way. You can use Tom DeMark trend lines, or you can come up with something out of your own, good measure, whatever you come up with, your own rules. That's great. But, horizontal levels are so much more reliable simply because everybody's looking for them at about the same spot. Trend lines can be totally different. Like, some people could say that this is the proper trend line on this market, and other people might say, no, that's wrong. The trend line was here, and the market's already broken through that trend line. You know what I mean? So there's so many different ways to draw trend lines, and so it's funny to me that people would say that you draw them the wrong way. But whatever. This wasn't meant to be about trend lines. It's meant to be about horizontal levels. Who has a market that you would like to look at right now? Who has a market that you want to see right now? Could be the euro. Okay, let's do that. Let's do the euro. And this will be what time frame do you want to use? We'll do the I have doubt on the tails before. Okay. Here, you have doubt on the tails before. Okay. We'll get back to that, Pedro. Alright. So this is how I draw my support and resistance levels. Notice that I'm on the weekly chart here because I'm drawing a daily chart support and resistance levels. First thing I'll do is I'll draw my levels, and I make these dashed lines. The reason they're dashed is to remind me that the market can break through them. These lines that I draw on the chart are like beer bellies. Why are they like beer bellies? Because a beer belly can offer some resistance. If I see a person with a beer belly, I might be able to push into their beer belly, and the beer belly will push back. So I might actually have to push my hand into the beer belly before my hand is pushed back, and it might get a little squishy in there. I also might brush my hand up against a beer belly, especially if it's like a hairy, sweaty beer belly. And if I brush my hand up against it, then I might pull it away rather quickly. So in both cases, my hand found the beer belly and was repelled. But what's interesting is that one time I just barely touched the beer belly, and the second time I pushed into it. In both cases, I found some resistance by touching the beer belly, right? So that's kind of like these support and resistance levels. Sometimes the market will hit it, and then fall away, and other times it will just brush up against it and then fall away. So you have to be aware that there are multiple ways that the market may react when it gets there. And we'll talk about how you can discern the differences in a moment. What I want to do right now, though, is draw these lines on the chart where the market has repeatedly reversed. And how do I know it's reversed? Well, let's take this one that I drew right now. This one I've drawn at 41.62. And I'm going to make it a different color so that it's easy to see. It's green. Why did I draw one here at 41.62? Well, the reason I drew one here, and the reason why I've drawn all of these, is because the market's found some support here, and the market's found some resistance there as well. The market found resistance here, and the market found support there. The market found support here, and the market found resistance there. And those bends in the chart are really going to be the key here, so that I know that it's a support and resistance level. Now, there's probably going to be one in this area here that I missed, so let me draw that one as well. I'm also going to go ahead and make them all red because I want to remind myself that these were all drawn on the weekly chart. There's one right there. And it looks like I probably have one down here as well. Yes, right about here. Boom, 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 and boom. Now, if I go to the candles, I'll see that I actually did capture them right here. So there you go. These wicks actually, there's a kangaroo tail right there. I don't know if you can see that. Right there. So this is the weekly. Now I'm going to go to my daily chart. Why do I draw my zones on the daily chart, on the weekly chart if I'm trading the daily chart? The reason why is because I want to draw the very best zones on the chart. Now, does that mean that I get all of them? No, it doesn't mean that I get all of them. It just means that I am finding those that are very, very obvious. Now, then what I'll do is I'll go back on the daily chart or the time frame I'm using to trade off of, and I'll draw in a few more, like this. Just like that. See that? And there's going to be one right here, like that. So now that I've got them in, it looks like I missed one right about here. Right here, right there. Oh yeah, look at all those touches. So the more touches I see, the greater the support and resistance level. Ideally, we'll have both support and resistance. Support and resistance. But oftentimes, if it's an extreme low, it'll just have support. And if it's an extreme high, it'll just have resistance. Okay, so now that's it. I've got my chart set up. Now what I can do is wait for the market to get to these spots on the chart. Now I'm probably going to adjust this one slightly to capture these highs here. But that's about what I was looking at. And this is really similar to the chart I had before. Why do I have all these lines on here? Because these are the spots where the market's reversed. So given that we see this on the chart, what we can say about the euro right now on the euro daily is that the euro came up here, it hit there, and it fell. And then it found support on this level at 1.3050. It came back up to touch 1.3144. Now, as long as the market can close below 1.3050, let's say, it looks like it's going to fall all the way down here to 1.2910. So might I take a trade here? Absolutely. Again, this all goes back to the last webinar we had on Ben trades. But the basic idea is that I'm risking about 110 pips to make about 120, 130 on this trade. Now, if it breaks through that first target, it could go even lower and come all the way down here to 1.2820, which would be another 80 pips. So about 210 pips on that one. So that's a pretty good pretty good setup there. Pedro says, but you could have that trade south. Well, I did actually have a trade on the kangaroo tail here. And then we also had another setup here on this daily belt. So we had two sell signals right here, other than the fact that it was a double top, or maybe even a triple top. But if you look at the line chart, you'll see it's a boom, boom, boom. That's a double top, and it fell. Now, if I'm looking at this from like a trend line point of view, I might even say that the market's busted through the trend line. It found support, 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 came back down, broke through, touched it from below, and now it's going to fall again. So there's a lot of reasons why I like this as a bearish chart at the moment. Now, what would change my mind? If the market came up here and bounced right here and printed a really bullish candle, that would look like a double bottom, and then that would support the pullback and keep going higher theory, if that's what you're talking about. Pedro, yeah. Hopefully that makes sense. Yeah. So that would support that theory. Okay, so that you've seen how I draw. Are there any questions about how I draw my support and resistance zones on the chart? Start with the higher time frame. Use the line chart on the higher time frame to find all these levels. And then once I've got all these levels on the line chart, I'll go down to the chart that I'm trading and then make sure that I didn't miss any, basically. Same theory, same exact method on other time frames. So for example, if I'm trading the 4-hour charts, I'll go to the daily and draw all of my zones in on the daily. If I'm trading the 1 hour charts, I will go in and draw my zones on the 4 hour. But I'll always drop down to my time frame that I'm trading and draw in any that I missed. So hopefully that makes sense. Pedro says, if you look at the 1 hour on the euro, then you should go long. I don't really see anything about this 1 hour chart that makes me go long. What this chart says to me is, if anything, it says consolidation, you know? To me, this chart is stuck, and it depends on, you know, where you're talking. Are you talking about this area that it's stuck in, or are you talking about this area here that it's stuck in, you know? Either way, the market's pretty much stuck right now. So I wouldn't say that the market is necessarily going up or down on the 1 hour. On the 1 hour, it looks like it was trending down here, but now we see a little bit of a retrace move up. But that's not really what you know. My interest is mostly on the daily, 4 hour, weekly. Those are the charts I like to trade. What other? Okay, if there aren't any other questions, we'll look at the euro yen. We had another question about the euro yen. Let's do that one. Which time frame should we do on the euro yen? Where is it? Majors. There it is. 1 hour. Okay, let's do the 1 hour. All right, we can do that. So here's the 4 hour chart, euro yen. I'll go ahead and put in my black and white candles just for a little bit of a mix up. And we'll go to the 4 hour here. Okay, obviously it's been in a strong uptrend recently. And now what I'm going to do is go to the line chart and make sure I draw in all my levels here on the 4 hour chart. Why am I on the 4 hour? Well, because I'm trading the 1 hour chart, and I want to make sure that I get really strong support and resistance levels here. It's going to be a little bit tricky when you're in a strong trending chart like this, because you get a lot of zones kind of like what I have here, which are, you know, those that are that don't necessarily have resistance and support, although this one does. But a lot of these zones are just going to be they're just going to look like resistance or support, but sometimes they don't look like both, you know. So let's do this one. Make sure that we have them all. And looks like we have one right here, one right there. And this will probably do it for now. That's probably all we need at the moment. Now, is there a question about, you know, what about higher levels? Well, obviously we want to look at what happened over here, right? Because we're getting so close to that. And this brings up a good point. I'm glad we have this chart, because if you're in a situation where, you know, the market hasn't been someplace for a long time, you need to go back and draw them in like this, especially if you're looking at like a 1 hour chart. So I need to know, where are these important spots, because we're really close to them right now. Well, on my 4 hour chart, I can see they're in this area here, like that. And it looks like there's one right in there. Cool. Okay. Okay, cool. So I'm not going to worry about these down here. Okay, so that's my 4 hour chart, and now I'll move to my 1 hour and just make sure I haven't missed anything here. And it looks like I probably have a few that should have some levels here, like that. Sometimes what happens is, you see how I have resistance, resistance, and then I see this. It looks like it didn't hit the support. If I go to candles, I might see a wick there. And in fact, I did. See that right there? Does everyone see what I'm talking about? That happens a lot, where you look at it and you go, oh, well, it didn't really touch it. Well, actually it did, because the wick touched it. And that happens I think it was this one right here that we were looking at, right here. You look at it and you say, oh, well, it missed it. It bent and it went up. Well, not really, because the line chart, there it is right there. The line chart actually looks at closing prices, so that's why. Okay, so given that we see this on our euro-yen 1 hour chart, what we can say is that the market has, it's sort of just drifting around at the moment. It doesn't have any strong direction. The 1 hour chart is in a box, and so what I would do, if I had to trade the euro-yen, I would say, okay, we're in between beer bellies. We've recently bounced off this beer belly down here. So where's the next beer belly? Well, it's going to be up here in this area. Now you could look at this as sort of a blow-off top. I know it gapped up, and that's kind of weird and all that, but basically you could look at this and say, you know what? This is a blow-off top, so really the top of the box is here. We have 2 touches. We've got 3 touches down at the bottom of the box down here. And so that's basically what I would do. I would say that's basically my box here. If it breaks out of the box, I would look for the market to come back up and touch the edge of the box and print a bearish candle from below or a bullish candle from above, and that would be my trigger to buy or sell. At the moment, we're in the middle of the box, and oftentimes you'll notice the middle of the box is often a support and resistance level all on its own. If you look at this, I'll make this one blue. If you look at this chart right here, you'll see that there actually is a support and resistance level over here, and it's the same, it came up in the box as well. And often around the 50% mark of the box, you will see something like that. So it's very common to see this. So on the euro-yen, I would say if I had to trade that, I'd wait for it to get down to 113.60 for a bullish candle to buy, or and buy all the way to the midpoint, which is right here. Or if it gets up here and prints a bearish candle at 115.50, I would sell all the way down to the midpoint and then hopefully the other end of the box. On the outside breakouts, if it broke out and traded above 115.50 and then came back down and printed a bullish candle right here on the edge of the box, I would look to buy. Likewise, if it broke out to the downside, I'd wait for it to come back up and touch the edge of the box and print a bearish candle, and I would sell. So that's how I would trade the euro-yen 1 hour chart. Fib levels are really cool, boss. To me, fib levels are really useful when you're looking at projections. So when you get to all-time highs and lows, let's look at something like maybe the Singapore dollar or the Canadian yen or something like that. So let's look at the Canadian yen. Oh, well, that's the Aussie Kiwi. Let's look at the Canadian yen, the Canadian dollar. Fibs to me are, actually, the best example is the Euro Aussie. Fibs to me are, here's another example, guys. And those of you that follow my trades have seen, we watched this. Market comes up here to 1.28 and it falls. Comes back the very first time, prints a kangaroo tail. And if you don't have the kangaroo tail book, you can always email me and I'll send you the book, right? Everybody here probably has it, but if you don't, if you're new here, you can get the book from emailing me, walter@fxjake.com. Kangaroo tail is very, very, very good system, and boom, it went. Touched where the market touched before, and it just fell. So the best example of fib trades to me are when the market hits a place where it hasn't been in a long time. So back here last year in November, it finally broke through 1.30. And so to me, the best example of a fib, was if you're looking at, say, from the high to the low, like this. So you go, okay, here's from this high to this low, and so where is the market going to go? That sort of thing. And so like profit targets. That's, to me, I really like fibs as profit targets because I say, okay, the market busted through this 1.30 level, which was the all-time low for a long, long time. And so where might I take profit? Well, I could take it at the 161.8 level or the 261.8 level, which it actually never made it down there. That's the kind of, actually, no, sorry, my mistake, it did. It had to go back up and touch it again. And, you know, we were waiting for the market to get up there and touch it all year. And I know some of you, someone, I can't remember who it was, he actually took this trade and it went 900 pips for him. Yeah. Does that help, boss? Hopefully that helps. Cool. Yeah, okay, cool. So, and why was this such an important trade right here? Because that was the first time the market got to this level after busting through. It was support, kangaroo tail, support, bullish big shadow, support, double bottom, triple touch, breakthrough. Came back up, touched it for the very first time, and it fell over 1,000 pips. And that happens all the time. Came up here and it touched it. The very next time it came up, it kangaroo tail, and then so far we've seen it fall from this kangaroo tail. It's currently 284 pips lower. So that's the kind of thing we see as naked traders, where we know where the sweet spots are. Now, how do we know if it's going to break through the sweet spot or reverse? Let me show you a really cool trick. This is what I do. Yeah, fresh resistance, exactly, Sanjay. Sanjay's got it. That's exactly it. Now, let me show you how I differentiate breakouts from reversals. And it's all no indicators here. This is a reversal. It's a classic reversal. Why is this a classic reversal right here? Other than the fact that the market already reversed. You know what we should do? We should just go back in the charts. We should just go back in the charts. Let's do that. I'm going to go back. And we're going to advance the charts one candle at a time. And we're going to guess. Okay? How's that sound? This will be fun. Okay. So I'm down here, and I'm going to hit the F12 key, because I don't want to use any hindsight bias. Now, what I want to do is decide, is the market going to reverse when it hits a zone, or is it going to break through? Now, I know that I've got a level here, and it looks like I've got a level down here. And those are the closest ones at the moment. So let's see. Okay, so now the market's closed below my level. So is it going to come back up, or is it going to keep going? Now, here's what I would wait for. I would wait for it to trade lower and then come back up and hit 97.12, and then I'd be interested in selling if it comes back up and hits it. Okay, so it's going lower. That's great. Now, I want to see it come back up and tag it. It didn't quite get there with that candle. I want to show you how I differentiate between breakouts and reversals, because this is really cool. We're on the 1 hour, aren't we? That's kind of boring. The thing about the 1 hour is that sometimes the market just sits there. Okay, I mean, to me, all right, does everybody see this big bullish candle here? To me, this is great. This is a sign that the market is probably going to break through 97.12. It's a giant candle. It's the largest candle we've seen in a long, long, long time, probably going all the way back to this candle. And it's even better than this candle. See, this candle closed near the midpoint, whereas this candle closed up near the high. So this, to me, is the beginnings of a bullish breakout. But let's just confirm that the market trades higher on the next candle. Let's see if it does in fact trade higher. It does. So this is good. Now, it's got to get to this next level, 97.12, and we'll decide when it gets there if it's going to break out or if it's going to reverse. Okay. So far, I've got nothing. I've got no reason to go either way. I do think it's going to break out just based on the size of this candle here, but I want to make sure by the price action. So far, I've got one touch on my zone. Okay, and then it's falling away. What I want to see on a breakout is multiple touches in quick succession. Let me write that out. Several touches in quick succession. What does that mean? That means the market's hitting a level over and over and over again, and then it finally breaks through. Kind of like what it did right here. See how the market touched it, and then touched it, and then it touched it, and touched it, and touched it, and touched it, and finally it broke. That's pretty common when you see the market getting ready to break through a level. It just sort of hangs out around the level, and then it breaks through. Contrast that to when the market touches a level and then doesn't come back for a long time, that's usually just a couple of candles, like a one touch and then it goes, or maybe a double top and then it falls, or a double bottom and then it goes away. So far we've got one touch here in the last two candles. Let's see what happens next. Well, now we actually have a... okay, this candle right here was on July 13th, and this one's on the 16th, so it was a weekend gap here, and we actually have a belt here, which is actually a pretty bearish sign. So it's not the best touch. We do have two touches here, but the second one is a belt, and that's very bearish. So, and you can see it did in fact fall from there, and it went all the way back down to the next zone. So this one, it was two touches in quick succession, but because this is a belt, that's usually that candle there. Maybe we'll do a webinar about belts, but basically that's a very, very good sign that it's going to fall. So now we're back down to this zone, so let's see what happens next. How do we know if it's going to break through or if it's going to reverse? Well, so far we've got two candles. Both candles, I would consider these as touches because they're within, like a couple of pips of my zone down here. So it looks like I have two touches. Let's see if it's going to do a big bullish candle and go away from this level. No. It falls. Okay? What do I want to see now? I want to see the market drift back up and touch it from below. There it is. It's touched it from below. That's a pretty bullish candle, though. I would want to see the next candle as a big bearish candle. Otherwise, I know that the market's going to hop back up on the other side of the zone. Okay, there you go. So that's a nice touch. And if we look at the line chart, that is a nice classic breakout. This would be worthy of a sell trade to me, and it looks a lot like the Euro-US dollar daily chart. Let me compare. This is the 1 hour Euro chart right here, and we can compare that to the daily Euro. Do you see the same? Do you see what I'm seeing here? The same thing. Double top up here, falls through the level, comes back up and touches it, and it usually falls away from here. As long as today we close, today below the low of yesterday's candle. Yesterday's low is 1.3055. If we close today around 1.3050 or lower, I would say it's going to fall. And the only thing it could do to ruin my party would be is if it double bottomed right here. That's the only thing it could do. If it didn't double bottom there, then I'd be looking to target down here at the very, very least. And we can compare that to our Euro-Yen 1 hour chart. Very similar setup. The market came up here, double topped, it fell, broke through, came back up, touched it, and printed a bearish candle. This, to me, is enough to take a trade. And so I would sell. I would put my stop loss above the high here. My stop loss goes right here. And I would sell if the market trades lower. And that would be, the market trades lower than that bearish candle. So in other words, if it trades right there. Is it going to trade lower? Let's see. Oh, it did. It did actually trade lower, and then it's hopped back up. That's not a good sign. But I'll stay in the trade and see what happens. Okay, I get stopped out. So there you go. That's a big fat loser. Let's see if we can wait for the next touch and see if we can determine what it's going to do. Okay, this is a nice one. See how the market penetrated it with the wick and then closed down here. That's good. This could be a fall away from this level where we had the belt. It could fall away here, but I want to see a bearish candle here to suggest that the market's going to fall away. And I don't get one. I get two touches in quick succession. Again, this is starting to suggest that maybe the market's going to break out and go higher. Let's see. 3 touches in quick succession. Again, it could break out and go higher. The only thing I would say about these candles is that they're really tiny, and they're inside of this big candle, so it could still fall away. But the fact that we have 3 touches in a row on the zone suggests that the market may not fall away. Okay, now we get a little bearish here, but it's not a very big candle. Okay, now we have another touch. So we have a choice. The market's going to tell us right now what's going to happen. It will either, 90% of the time, it's going to do one or the other here. It will either double top right here. In other words, it will hit, and then fall away and double top, or it's going to break out and squeeze and go higher right now. And if it squeezes and goes higher, it's going to go straight to this level right here at 97.60. But let's see what happens. It breaks. So that's it. It's gone. I would say this market's going to trade higher, and it's probably going to head for 97.60. What about a trade? I could trade if the market trades higher than this candle, and I could put my stop loss down here below this candle right here. So it'd just be trading off that. Again, this is a pure naked trade. It's a breakout based on the fact that the market touched, retraced, touched, and then broke out. A lot of times the market will come back down and touch the 97.12 level here. And see there, it did right there. And that's bad. That is a breakthrough. That's a fall away right there. This would be, to me, this would be a nice spot to look for a sell here. So perhaps what I would do here is say, you know what? Maybe I have my zone a little bit off. Maybe I should be counting these bounces over here. Boom, boom, boom. And then my belt over here. And then I've got a double top right here. This looks like a double top. I would now say we're not going higher. And what am I doing here? I'm just using what the market's telling me at the moment. Market's telling me double top. If it trades lower, it's going to fall. And it did. And where did it stop? The market stopped right on my zone. Exactly where I would expect it to. That's the first hurdle. Where's the next hurdle? Where's it most likely to find the next hurdle? It'll be right here. Let's see what happens. So we get a little bit of a bounce. Comes back up. Usually what I'll do when the market hits my first target is I'll move my stop loss to break even. So this would have been a break even result. We don't hit target 2, we just hit target 1. Now let's see what happens here. We have 2 touches on the zone. Are we going to get a third touch in a row? Because that would tell us that it's probably going to break out and go higher. We do get a third touch, but it's not a very strong candle. Let's see if we get a 4th touch in a row. Yes, we get a 4th touch. Let's see if we get a 5th one. Yeah, this looks starting to look like it's going to go higher here. Let's see. We need a big bullish candle to confirm. Still don't have it, but this is this idea that I like to talk about, which is multiple touches in quick succession. We've got 1, 2, 3, 4, 5, 6, 7 candles that are right on this spot where we saw a reversal in the past. This is where I would look for the market to go higher. I do need a bullish candle though, and I don't have it. I need a bullish candle. And when I say a bullish candle, I mean a candle like this one right here, like this white candle right here, or like this candle right here. This one closed near the high. That's what I'm looking for. Okay, it's going to fall away here. This is going to be a move back down. It touched it. It broke through. It fell through. Came back up. Retouched it. And if it gives us a bullish or bearish candle here, it's going to fall. And there it goes, all the way back down to the zone. The wick of the candle touches our zone, just the exact same spot where it touched before. So does that make sense? Does this interpretation of what happens when the market gets to a zone make sense? The idea here is that if it's going to touch it and fall away and move away from that rather quickly, it'll usually do it in a few candles, or maybe a double top or double bottom. If, however, it hangs out there, it usually breaks higher. Now, this is a case where it hung out there, and it didn't give us that big bullish candle to confirm it was going to break out. It hung out there, and then it fell. It gave us the bearish candle. It told us that what? It was going to fall down, and it did. What did it do before it fell down? It came back up and retouched it, like it often does. And that's the exact sort of setup I'm talking about on the Euro US dollar right now. Very similar on the daily chart. Yeah, so and now what's going to happen down here? Well, I don't know, but we've got 2 touches on the zone. It looks like it might want to break out. Let's see if it does. Nope. Now it's starting to, now if you look at the line chart, look what you see. It's looking like it wants to go up. But that doesn't mean it will go up. It's had 3 candles in a row touching the zone, and the close was down near the middle. It's kind of, it hasn't really told us the story just yet. Let's see what happens on the next one. Okay, it looks like it may double bottom. Let's see. Not yet. No. Here we go. If we get a big bullish candle here, that'd be a spot for a buy. Big, big, big white candle right here. No. Oh, little baby kangaroo tail. Okay, there you go. Whoa. Okay, now look at we have several touches in a row. If you look at the line chart, you've got one here, you've got one here, you've got one there. This is starting to look like it's hanging out, especially with that bearish candle. It's starting to look like it may actually break lower. Let's see. No, okay, now it's going to go up. Big bullish candle tells me it's going to go up, and it's probably going to make a run all the way up here to 97.20. Ooh, no. No, no, no. Now it's going to go down and hit the next level. So this was, okay, let's talk about this area right here. This is really good. Let's look at all of these candles right here. How many candles do we have here? And where's our zone at? Let's say our zone is drawn at 97.45. Okay. 97.45 where we had a touch here and a touch here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. Let's not count this 11th one where it broke through. So we have 10 candles here, right on a zone. How many of these candles touched the zone out of the 10? 1. Let's not count this one, even though it's like, you know, it's 3 pips away, but let's say it didn't touch, okay? But this one will count as a touch. That definitely touched. That one did, so that's 3 out of 4. That one didn't, so that's 3 out of 5. This one did, so that's 4 out of 6. This one did, so that's 5 out of 7. This one didn't, so it's 5 out of 8. This one did, so it's 6 out of 9. And this one did, so it's 7 out of 9. 7 out of the... so it'd be 7 out of 10, I guess. 1, 2, 3, 4, 5, 6. 7 out of the 10 candles here touch the zone. That's what I mean by quick multiple touches in quick succession. That usually means it's going to break through. The market usually, when it hangs out on a level, it'll break through. Now the tricky part was this big bullish candle here. That was a little bit tricky to figure, right? But usually when you see multiple touches in quick succession, that means a breakout. Now when you see touches where the market just touches 2 candles here and then falls away, another 2 candles and then falls away, that's like a double top. And usually, you know, when it just touches once and then it falls away, that usually means, okay, the market's gone. It's over. But when you see multiple touches in quick succession, especially on the higher time frames, it's like the dailies, you know what, this chart is pretty, let's go to this one. Here you have 2 touches and the market falls away. Here you have 1, 2, 3, 4 touches and the market falls away. 3 touches and the market falls away. 2 touches and the market falls away. And yet, over here you have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 out of the last 11 candles touch, and the market did in fact fall through. Now it jumped back up rather quickly, but that's an example of what I'm talking about here. Here again, what happened when the market came up here? Market came up here to this level here, and it touched it 3 times on the line chart, but look how many candles touched. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days the market hung out at this 78.15 level, and it finally blasted through. What did it do after it blasted through? It came back down, touched it, and then it went back up. It will often do that. A lot of people say, oh, I missed the breakout. Well, actually, you can come back in, wait for that retouch, and the bullish candle here is the clue. So that's really, you know, once you learn how to see these spots on the chart where the market reverses, once you see those, then all you have to do is wait for the market to get there and see if it's going to tell you, is the market going to break through or is it going to reverse? Here we have the New Zealand Swiss, and I'm waiting for it. Why is there an arrow right here in my chart? I'm waiting for it to get up here, because when it does, I know I have a great possibility of selling it there, especially if it only takes 2 candles to touch it and then starts to print bearish candles. That's a great opportunity for me to sell, so that's where I'm waiting for it. Are there any charts that anyone wants to look at? No sound. Can you hear me right now? Ahmed, you should be able to hear me. Oh, okay, cool. All right. Ahmed said no sound. Okay, cool. Oh, hey, Colin, welcome. I didn't even see you. Pound. Okay. Okay, so here's an example of what we were talking about. So the pound, you know, was respecting this trend line. It broke through it, touched it, and then it went up. Now we see a belt up here. It fell. This could be a breakout. This could be a breakout, Colin, because to me I got 1, 2, 3, and today we have 4 of the last 4 days the market has touched this level. So this is a great example of what I'm just talking about on this chart. This is a great spot for the pound to fall. What would make me think it's going to fall? Well, if the market closes below 1.6030. So if it closes at, let's say today the closing price is 1.6022. If that's the case, I would be willing to sell, and I put my sell stop or my stop loss above the high of this candle, which is 61.27. Where would my target be? Well, it'd be the intersection of this trend line and the horizontal support level down here at 59.35. I might even go to 59.40 just to be a little safe. So that would be 60, you know, that's roughly, it's about 80 pips on that one. Now, where would the next target be? Well, pretty easy. The next target's going to be probably down here around 1.5860, where the market bottomed out down here. Yeah. So this is an example of exactly what we're talking about. Notice how, because we have so many candles touching here, especially yesterday had a really nice bearish candle. That's a good sign that perhaps we're going to see the market trade lower. Will it always trade lower here? No. But if it closes below this level, that's a pretty good sign. Especially, let me zoom in. This is really cool. Especially if it closes below where it closed over here. So the closing price here was 1.6032. So if it can close below 1.6032, that would be great. That would be really good. That would be a good sign for the pound falling all the way down to 59.40 and possibly 58.60. 58.60. Hopefully that helps. I don't want to. I think we have a few more minutes. Boyke, did you want the yen? Oh, you were saying yes. Okay, got it. What other pairs? Do anyone want to look at other pairs while we're here? Any other pairs? Beer bellies. We talked about beer bellies. Here's a great example, actually. This was from the other night. On the pound Aussie, the market was trading down. It found support here, touched a few candles, and the big bearish one said, okay, it's going to trade lower. Came down here, and then it came back up, retraced, and printed the bearish candle. So this is the retouch. The market found support here at 53.61 on the pound Aussie, 4-hour chart. This is the 4-hour chart. Came back up, retraced, touched that level again, and then printed the bearish candle. The clue was the bearish candle here. And as soon as that bearish candle prints, we wait for it to trade lower. And where do we take profit? Where it bottomed out before, and it made it easily. Now it's starting to look like it may find support here. And look where all the support was back here. So if it can, especially if it can trade higher than the high, if it trades above 1.5308, then it's probably going to go all the way up to 53.60 again. So, hey Frank, welcome. You want to see the Swiss yen? Let's take a look. Ahmed, we'll talk about that at another webinar. Ahmed wants to talk about the trend lines. We'll talk about that at another webinar. Swiss yen. Swiss yen's over here, I believe. No. There it is. Ah, very interesting. Okay. All right. You know, here's the thing about the Swiss yen. A lot of these yen pairs are really going off to the races. And you can see the Swiss yen is up against serious resistance. Boom, boom, boom. This is all the way back in 2007, 2008, because I'm on the weekly, right? And now we're up there again. I wouldn't be surprised if some of these yen pairs start to fall again. I don't really. I mean, price action isn't very good at telling us because look, we got multiple touches like we were talking about before. 1, 2, 3, 4, 5 of the last 6 candles have touched this level. Really, the better chart is the 4-hour. This would be the better one to trade to me because it gives me a cleaner view of this box. And so if the market were to break out of this box, which would mean above 95.50 and then printing a bullish candle off 95.50, that would be a nice place to buy, right around there. And likewise, if the Swiss yen was to break out of this one, I would want to sell here. So if the market were to break through here and come back up, I would sell it off 93.97. You need to sell lower, come back up, print a bearish candle, and then go lower. Print a bullish candle above here, break above 95.50, come back down, print a bullish candle at 95.50, and then I'd buy it. So that's all the deal. That's the Swiss yen. If you have too many support and resistance, great question, Blakey. If you have too many support and resistance lines on your chart, then just go to the higher time frame and draw them in on the higher time frame. Just do that, like we were talking about earlier. So let's say I got a chart and I got all these lines on it, like, I don't know. Hey, look at that. Market came down to 48.28, which was the likely support area. It may go up here. Pretty cool. CAD Swiss 4 hour. CAD Swiss 4 hour looks like 94.90 is a good spot. Let's go to 4 hour. If the CAD Swiss gets up to 94, again, we could sell it there, but it would need to print a bearish candle. Now, I would be a little bit worried if it got up there, because that would mean that we've had multiple touches up there in the last, let's see, in the last 20 candles. So that's a lot of, that's a double top, and then it fell, and now it's come back up again. It may break through this time. So unless it gives me a really nice bearish candle there, I will wait for it to get up here. And that's 94.90. So at the moment, I could sell it at 94, but it's going to have to be a really nice bearish candle. Otherwise, I'd wait for it to break and go higher. Well, to me, Ray, it's everything. Ray says, how important is it to understand candle behavior? To me, it's everything. If you're not, here's the thing. You're using candle behavior whether or not you're a naked Forex trader or not. If you're using RSI, go Google RSI formula and see what the RSI is. Does everybody know what it is? It uses the closing price. Here, I'll show you. Look, we'll Google it right now. We go to Google and we look up RSI formula. Okay? So let's say I'm an RSI trader. RS equals a 14-day exponential moving average of up-day closing gain. You know what that is? That's basically saying, is the market closing up, right? Is it going up? So it's using the closing price. That's the same thing I'm doing when I say, like when I'm looking at this candle right here and I say, look, this candle right here closed on the low. This red candle right here. Does everyone see it? This red candle closed on the low. The low is 93.75. It closed at 93.75. That is telling me there's weakness. Not only did it double top, but it closed on the low. So if the market trades lower than that low, I'm in a pretty good position if I'm in a short. And obviously I was, and it came all the way down to here. Here we have another candle. This candle closed almost on the high. So I'd say, okay, if the market trades higher in the next candle, I'm in a pretty good position if I want to go long. And it did, in fact, go long. It did go higher. So, when we're using indicators, we have to keep in mind that the indicators use price action too. They just jumble it up a little bit. They add numbers, and they multiply numbers, and they subtract numbers. But they're still using closing price, opening price, high price, low price, all the same things that we use when we interpret candles, but they're just using it in a formula that they've decided is a really important formula. That's all. Yeah. Boyke, if you have too many lines, what chart are you trading? Are you trading the daily chart or the 4 hour or what? If you have too many lines, then just go to the weekly chart. So if I'm trading let's say I traded the Aussie dollar daily chart and I have too many lines, then I will go to the weekly. I will go to the weekly chart on the Aussie dollar, and I will draw my zones on the weekly chart, and I will only use weekly chart zones on my daily chart. That's how I get rid of the too many zones problem. If I have too many zones, I just go to a higher time frame, I draw every single one that I can find on the higher time frame, right? Because I want major support and resistance levels, not minor ones. And then I say, okay, there we go. That's it. I'll go to my daily, and that's my chart. That's how you get rid of too many lines. If you have too many lines, go to a higher time frame, go to the line chart, draw on your zones, and there you go. Now I've got a zone on my daily chart approximately every 200 pips, which is about what I'd want to see. About every 150 to 200 pips. That's exactly what I want to see on my daily chart. That would be the average. And that's back to where I'm at. Sometimes it's going to be 125 pips. Sometimes it's going to be 180 pips. But somewhere between around 150 to 200 pips. So there you go. That's what I would do if I had too many lines. And that's fine. Look, on this chart, the daily chart here, I've only got 1, 2, 3, 4, 5, 6 support resistance levels on the chart right now. And that's great. I can work with that. I hope that helps. Ray, you can send me an email at walter@fxjp.com and I'll give you 6 books on trading naked. Okay? Hopefully that'll help. Yeah, that's the way to do it. Ahmed, yeah, it's okay to use all those time frames, but it's better if you actually just stick to one. You might stick to one time frame and then use a lower time frame to hone your entry. That's a possibility. But it can get really confusing when you do that. It could be a problem. How do you handle your 4-hour charts when there are other 4-hour charts around the world? Raphael, good question, and this comes up with price action traders all the time. What I basically do is it's called Hot Pizza. Boyke, if you have the book on Hot Pizza, then you have the book on support and resistance. The Hot Pizza ebook is the one about support and resistance. Gaps are significant. Every Sunday, every day at 6 p.m. New York time, I look at gaps for free on my website. Yeah, we look at gaps all the time at fxjp.com. Every Sunday at 6 p.m. New York time. Okay, regarding the 4-hour charts, this will be the last question. Thanks so much for spending time here, guys. I know I got to go. Basically, I just want to say that I appreciate your time. I know you have busy lives. I'm glad that you're here. The last thing I want to say is when we're trading the 4-hour charts, we just have to decide what time frame we're going to use. That's how we do it. I like to use the 5 p.m. New York close. So my 4-hour charts start at 5 p.m. New York time, 9 p.m. New York time, and then 1 a.m. New York time. Right? That's when my charts close and open. So I use those ones. So those are the ones I like to use. Yeah. Thanks, Keller. Thanks, boss. I hope that helps, Raphael. We're still trading support and resistance, so we're still trading the same thing. It's just, how our 4-hour candles look. Take care, Cat Pip. See you, Boyke. See you later, Colin. Have a good one, guys. See you, Sanjay. Bye, Frank. I'm gonna put a video up now on the Daily Trader for everybody. Thanks, guys, for all your time. Yes, I will be back in February. I'm going to Thailand. See you later, guys. Have a good one.